Good morning, everyone. Marlene Gonzalez with Canvas Real Estate here, and I have our colleague Austin Palacios with First Origin Mortgage joining us this morning. We're going to do a tag team, right, Austin?
Yeah, absolutely. Good morning, everybody.
Definitely, definitely. Well, today's class goes hand in hand. One thing is to ask the right questions when you meet a potential buyer, whether it's in that first meet and greet or that you schedule them to come in and have an actual session to basically find out what their needs are and how you can guide that future buyer to eventually do their purchase and with you. And it's not just you, it's a team that's involved in this, okay? You have the mortgage if they're going to finance, you've got the title, you have the attorneys, the inspection company, the appraiser, the insurance company, so on and so forth. So you've got to be ready, but especially at the beginning when you do that first buyer consultation.
It's huge. I can't stress enough the importance of that initial consultation, because if you get enough information up front, it not only saves you time as the realtor, but it also makes the process that much faster for them to get the home that they want and for you to get your commission at the end of the day.
Most definitely, most definitely. And a lot of times, where do you meet people? You meet people, for example, at open houses. And believe it or not, open houses gets a lot of direct buyers. Right there is when you need to start developing that relationship. Maybe not at the moment that you're showing the property, okay? But definitely follow up, follow up, follow up, because it's a way to capture potential buyers and basically not invest any money, just your time. And I've heard realtors say sometimes, "Oh, but I'm too busy, this and that," but never shy away from that. If you can't handle it, go ahead and refer it to an agent in our office and get at least a referral fee. But open houses, for example, are not to sell that property necessarily. Open houses is to create opportunities at one point or the other, correct?
No, 100%. I can't stress enough how many times I've seen realtors turn one open house into 6 clients. That happens all the time, especially when you guys get these beautiful listings that you have. Try to milk the open houses as much as you can. Door knock. Man, if you get me to go out there with you, I'll door knock with you. It's that important, because you never know if the neighbor even needs to sell, or if the neighbor has a friend, and so on and so forth. And just the marketing in general gets you those leads too.
Right. Even the buyer, maybe the buyer needs to sell before they purchase their
100%.
other home. And I have to tell you, First Origin Mortgage, who's our in-house preferred lender, when he hears that we're doing open houses, he prepares a financial flyer. We can maybe share the one that you did for the open house I did this weekend, as a matter of fact. And a lot of times he actually visits the open houses to help out with the process. It gives it a lot more credibility. And definitely he's there the day of closing, right?
Yeah, I definitely am. And I try to do one open house a week. So if you tell me a week of, it might be hard because I usually have one scheduled already. But tell me 2 weeks before, 3 weeks that you're planning it, boom, I'll be out there and I'll help you guys out. No problem.
Perfect, perfect. So I'm going to go ahead and share the screen again, and we're going to be toggling back and forth, okay? So please bear with us. But this is being recorded, and we're going to share with the office afterwards, okay? So let's go here to the lead sheet. This is called an actual lead sheet. And I'm going to email it to all of you once we finish here, okay? So it's either a call that's being taken, or you could use this to pre-qualify the person either over the phone or when you're doing an actual buyer question consultation, okay? And if at that buyer consultation you could get the lender to be present, it even carries a lot more weight. Because yeah, you could find out about all these things, but if they don't take the time to get pre-qualified, you're not going to progress, because you need that at the moment of preparing an actual offer of sorts, okay? Now, the other thing that is important, a lot of people say they already are pre-qualified, okay? They already have their preferred lender. I have to tell you, invite them to get a second opinion. Just like when you're buying a car, don't you go to maybe one or more dealership? You know, a loan estimate doesn't cost anything, okay? And many a times they can do it with just the paperwork that they're presented to support the loan that they're trying to get approved for. Other times it's a soft pull that doesn't affect the credit, but that way they can compare apples to apples. And First Origin Mortgage Lenders is a low margin lender. They do their underwriting in-house. They schedule their own appraisers. They do their own funding. So we have a lot more control as opposed to going with a bank that has limited programs, okay? Or with a mortgage broker that basically shops around to see who's going to compensate them the most.
Correct. Yes. Correct. No, and it's important to know those differences because flexibility and timing is key in this market. As you guys know, interest rates are changing day in and day out with the market, the tariffs, just the different things like the employment, the different things that are going on in the market are always changing. So you need to have somebody who is stable enough to be able to give you at least a conservative number and try to get you the best case scenario as well. And we're going to be striving to get you those savings day in and day out. And we strive ourselves in making things happen, you know. The fact that we know the appraisers in our appraisal network is absolutely huge. They help us out big time on some of these loans, especially I'm sure you guys have seen some pretty beat up properties. I know I have in the past, and listen, we get them done at the end of the day because we know exactly what it takes to get those properties done.
Definitely. Now, let's just go over very briefly this lead sheet. This is something you could be writing it down, but these are questions to probe that individual that either called you, reached out, visited an open house, et cetera, et cetera. And it's going to get to the point that it's just going to be very natural for you, obviously, to take as much information as possible of how you met that prospect, okay, to convert them into an active lead. The source of business is very important. You want to gauge as to how these contacts are coming about through sphere of influence, through an open house, through a networking event, through social media advertising, to a property booth, so on and so forth. So in the future, you know where to invest your marketing dollars of sorts, okay? And always try to find out who the person's better half is. Because if it's a married couple and only the husband came in or the wife came in, you want to get to the point that you meet both of them because they are the decision makers if that is the case, okay? So some of these pre-qualification questions to stir up and start developing a relationship or a connection with that individual when you have them in front of you or over the phone. Like, for example, how long have you been looking for a home? Okay. Did they just start? Have they been looking and they're disillusioned because they can't find what they're looking for? And I have to tell you, a lot has to do that if they're shopping around and not working with one realtor on an exclusive basis, it could get very challenging if they're dealing with different people at the same time. So your job is to get them to work with you and only you. Okay. And then once you give them a great experience, have them in your database so they can refer future clients to you. Have you seen anything you like? I'm sure there's a lot of things that they have liked along the lines, but why didn't they make an offer? What prevented them from doing so? Was it the price point? Was it the fact that it was in an association and the fees were too high, so on and so forth? And you try to gauge as to what they liked about that property compared to others, and maybe if you're at an open house compared to yours. Okay. How soon would you like to be in your new home? Okay. We have to gauge, do they have 60 days? Are they looking 6 months in advance? It's the summer, maybe they want to make sure they're in their new property before the kids go back to school, et cetera, et cetera. Will you be needing to sell another home in order to make this new investment? Maybe they don't need to sell the home. Maybe they want to cash out, right?
Yeah,
and take
absolutely.
the equity out of the home, or a HELOC as well that you can touch upon. That's something that we can help them with. Okay. Next question, will you be financing or making an all cash investment? Okay. Um, the cash, is the cash readily available? Or maybe the cash is in a 401k, or it's in a Fidelity CD and the maturity date hasn't come about. So these are important questions to ask. If they're financing, then we got to jump to question number 6 here. Have you spoken or arranged to speak with a lender or bank of your choice? Okay. And again, even if they have, you gotta position yourself so they at least give us a chance with no commitment whatsoever, but we could probably surprise them and give them something more tangible of better value, and then they end up going with you. You know, when you have a transaction that you work with the preferred lenders of your company, it is so much smooth. You just can go into the office next to ours. You can do a quick phone call, and you're going to get those answers right away. When you work, let's say, with a bank, it's like you're calling the person that took the application, but then it kind of disappears in this department called underwriting, and you have no access to these people. And it's just the process is so much more lengthy. I know we're talking about homes, but we have a commercial contract in place, and they're going with a bank. I'm not going to say the name of the bank, but they're going with a bank. The appraisal was done. We waited 3.5 weeks before that appraisal was completed. I know commercial appraisals do take longer, but everybody was getting anxious, and we needed to provide an answer to the listing agent and the seller, and we had no answer. So it was quite challenging. When those, how long do appraisals usually take, residential versus commercial, Austin?
Residential. I mean, you're gonna get it back within the week. Usually, it's gonna be, man, it could be same day, it could be a few days. It really just depends on how that appraiser works, because each appraiser is a little faster than another. But we do require it being brought back to us within a certain amount of time.
Right, commercial is a little bit more challenging,
Yeah,
obviously.
commercial, you might see a week to 2 weeks. 2 weeks is probably the average, never 3.5 weeks. So that's ridiculous.
Yes, I know. But that client decided to go direct with a bank instead of an in-house lender, because First Origin is an actual lender. Okay. And if they're speaking with someone, who is that person you have in mind? Or will you like me to arrange for you to speak to our lender? I mean, I've been in front of clients and I pick up the phone, I send a quick text to Austin, you got a minute? And right there and then, Austin and myself do a tag team to capture the interest of that client and get them to consider us as well. Okay, so next thing here, and it says your name in number 8. When I meet someone, I like to address them by their name, not say their name every 5 seconds, but it creates a connection that you've taken the time to memorize their name, and you're personalizing that conversation where they can hopefully open up and connect with you. Okay. There's the time where maybe you want to do an actual buyer consultation at the office. These days we work remote. These days we go to a Starbucks, right? But there's nothing like bringing a client to your office so they see that you have a professional company, a professional setting, that if something goes wrong or if they have a concern, they know who to go to, who to knock on whose door. And here we answer calls all the time. In fact, at our office here in Miami Lakes, when 5 o'clock hits, and the phone rings 3 times, because we've had people call the office directly, it actually goes to my mobile. And trust me, I will track our agent down or whomever we need assistance to be able to respond to the call of that particular client. Okay, so try to schedule a meeting right there and then. Give them some options. Don't just can you meet with us? That's not an open-ended question. Let me look at my calendar. Can we do such and such time and date, or such and such time and date, to make them give you a commitment? Okay.
And on the point of answering the phone, I cannot stress enough the amount of times I've earned business because I'm available at all times of the day. Because banks, they close at 5. A lot of other lenders, brokers, whatever it may be, do not pick up the phone past 5. So you have to pride yourself as an agent, as an individual. You have to be available for your client, because especially when you're starting out. I know there's a lot of new agents that are going to be watching this. You have to be able to pick up your phone at those random times, because that is the difference between you and another person right away. You're picking up the phone at times that others would not, and you're going to earn that business 9 out of 10 times.
Definitely. And I have to say, Austin's been on vacation and he's answered. I don't know how he does it, but he has answered
Gotta-
even when you're on the other side of the pond.
Yeah, gotta pay for that Wi-Fi package for sure.
Yes, definitely, definitely. Okay. One last question before that appointment can be scheduled. You know, it's important to ask in number 9, do you have any savings for this investment? Do you have a way to get the down payment? Is it in an account? Is it in a 401k? It's important to know where the source, or your parents or your sister or cousin is going to give you a gift letter and help you with those down payment. And if you don't have enough down payment, then that's the time definitely to bring in Austin. And Austin's going to cover some of these buyer assistance programs that are available, and we can take advantage of it. Because if you really plug in with the right lender, and you bring that buyer to that right lender, it's a done deal pretty much, okay? And very importante, as I like to say, I always like to know from the very beginning in number 10, are they working with another agent? Okay, because buyers sometimes have the perception that if they go directly with the listing agent of each property, they're going to end up getting a better deal. And that's not necessarily
Definitely not
the
true.
case. You know, if the seller has hired a realtor, whose interest is that realtor going to look out for? The seller or the buyer coming in? Yes, it's very attractive to make a double end commission, but you have to think of the best interest of the client, of the transaction. And I've been placed in those situations where I've had offers from another realtor and I've had direct offers, and I have to put my interest aside to see what is best for the client that I'm serving them, even if it means that I have to work with another realtor as opposed to doing a double-ended deal. Okay, you want to always be fair, because trust me, that client is going to remember you and they're going to leave that closing table with a smile, and you'll probably end up both sides as happy customers. Okay, and there's many a times when you're in a transaction and the buyer who's working with another realtor actually likes the way you've handled everything and your professionalism. And sometimes they've actually, after the fact, reached out. So you have to earn every potential client out there, okay? So then you got to ask those key questions. How many bedrooms, bathrooms, how large? Do you want a corner house? Does it have to be 1 story? Does it have to have ADA compliant bathrooms? Because maybe the person lives with an elderly family member, so on and so forth. Do you need a garage? So in other words, what is their wish list?
Right.
What would they like to stumble upon? And when you go to the MLS, you could look for those specific type properties. Okay, does it have to have flooring or carpeting? I need a big yard for the kids, fenced. I want to purchase a home close to this school district for our children, so on and so forth. So all those key questions. And yes, there's a personality type and a personality for the type for the client, but we're not going to go into that. We should actually do a class to be able to classify what personalities people have.
Yeah, I would like to do that. I like the psychology part of this business.
Yeah.
I like to think I'm pretty good at that. But
Yeah. You know, I don't know if I've ever taken that test to
Yeah.
see if I'm a D, an I, an S, or a C. Our productivity coach, Joel, speaks to someone and he immediately says, this is a D, this is an S, this is a combination. So I guess he's the expert. We should bring him in to do
Yeah,
a
he
class
should
like that.
probably do it.
Because depending on the type of person is depending how you are going to relate to that person, okay? And one thing I always say, even though us in sales, we talk, sometimes it's good to listen.
Yeah.
Okay, no matter what type of personality that you're dealing with, because they're going to give you signals. They're going to give you information that you need to know how you will communicate with them. And if it's a couple, you listen attentively to both. And sometimes you could tell who is going to be the decision maker.
Yeah,
Most of the time is the woman, right? No, I'm just
I
kidding.
think so.
You never know, but you want to have both of them feel as important, okay? Well, now that I've kind of covered this little questionnaire thing and what you're going to be looking out for,
Mhm.
why don't we go into the most important part, getting these people pre-qualified? Because
Absolutely.
without that, you should not be going into the MLS. You should not be coordinating showings. And now with the way the market works after the NAR legal settlement, you have to have that conversation to determine if that buyer is going to work with you, preferably on an exclusive basis.
Mhm.
Whether it be a property that you source or something they saw driving around, that you're going to work in their best interest. Even if that exclusivity is only 30 days, 45 days, 60 days. I tell clients, listen, if I cannot find what you're looking for and the first 30, 60 days, you can fire me and just go to someone else. But trust me, if you give me your 100% commitment to work with me on an exclusive basis, I will guarantee that I'm going to find that home. Obviously, if it exists, but even if that perfect home doesn't exist, I'm going to bring options to the table that maybe interest you enough to explore.
100%.
Okay?
That's important.
That's what's important. Okay, so do you want to go ahead and cover your,
Well, I
look
have a
at
lead
this.
sheet also.
Yeah, look at this cheat sheet that you could be looking at, and we're going to email that to everybody on the different types of loans. So do you want to go ahead
Well,
and
I
kind of go
sent you
over this?
over a lead sheet also, so we can go into that on the
Okay.
pre-qualification side, and then we could talk about the cheat
The
sheets.
cheat sheet. Okay, so here's the realtor lead sheet. Check it out. So you're gonna have my consultation sheet, and you're also gonna have one geared towards the financing aspect,
Yeah,
correct?
absolutely. So it's obviously Marlene's and Joelle's lead sheet is amazing. It has the questions and what you should be asking exactly. This is more tailored towards a buyer that you're getting in, and you can see these buyer discovery questions. These are questions that I ask the client as well. So if you want to more or less figure out what they are trying to do, these are questions that are guaranteed to get you the best answers possible, right? And it also kind of gauges whether you're going to be wasting your time or not, right? Because a lot of times too, I don't know, like with these Zillow leads, the Realtor.com leads that people might be doing, they might not all fit these, right? So they're going to tell you, oh yeah, I want to get a home that is a 4.3 in South Florida. My current annual income is 50,000. Okay, at least you got that information out of them before you kind of wasted your time and sent it over the pre-approval and so on. Maybe you showed them a house in good faith or something like that, because that happens sometimes, right?
Of course. Yeah, well, sometimes they'll call you because they saw it on Zillow and you meet up with them and you show them your listing. You know, at that point, at the very least, they should acknowledge that you were the one that showed them that listing by having them sign a showing agreement. Which
Right.
the showing agreement is not a commitment. It's just saying, I am the one that showed you this home. And if you want to look into this, then we could discuss about getting into a more formal relationship, if I may.
100%.
So in other words, you welcome for agents to ask some of these questions, or you
100%.
prefer to cap, because I didn't touch upon that. Are they looking for an investment second home? Are they looking for a primary
Mhm.
property? So that's important to know. Are they a first-time home buyer? Isn't there a misconception about first-time home buyer?
There is. So if you have not owned a home in the last 3 years, let's say you bought in 2020, you sold it in 2020 also, and now you're in 2025, you're considered a first-time home buyer again.
Because
As long
three
as
years.
3 years, that's it.
Yeah, yeah, they probably need to change the lingo in that or give a
Yeah,
full disclosure.
it's a little weird.
Yeah, now, do you currently own a property? Because then that's gonna tell you,
Yeah,
okay, they might have equity in the property they could pull out. Maybe they sell the property, they do a HELOC, line of
100%.
credit, so on and so forth.
And I can't tell you how many times I have well, especially like on foreign nationals, so they buy a property a long time ago, investment property, and they're like, oh, we're first-time home buyers. But then I'm like, do you currently own something? Oh yeah, we own a property. I'm like, okay, so you're not a first-time home buyer. So then I
Okay.
have to explain that to them. But that's a great question as well, because obviously, like Marlene just said, you can pull out equity, you can pay for stuff, and you don't. I mean, obviously, you guys would like to sell a property too, so you guys can, push them that way, whatever you guys want to do, depending on their situation.
Right. So also importante, are they buying alone or with someone else? Do they feel they're going to need a co-signer? Because that seems to come up a lot
Big
if the
time.
person's debt to income ratio is
tight.
tight, maybe bringing in a second buyer would work if they potentially have that. Comfortable number at closing. Can you elaborate on what you're referring to
Yeah,
there?
absolutely. So some clients, right, come to you, they have a budget in mind, right? They're not willing to spend over 30,000 or 25,000. So if they're telling you I only have 8,000 in my bank account, guess what that means? That's down payment assistance right away.
Mhm.
Right away. And taking that stuff into consideration, because we have programs that fit certain areas, certain cities, certain counties, and they have to be kind of well structured to make those programs happen. And that's why it's important to know the comfortable number at closing.
Right. You know what I always like to ask? When I'm getting a listing, I ask the owner, how much do you want for your home? I want to gauge, where did you come up with that figure? And I do the same thing with a buyer.
Hmm.
What do you think, what home are you looking for? What price point? And once they blurt out a number or something along those lines, is how did you come to that determination? Did
Right.
somebody already pre-qualify you?
Great question.
Because, maybe they want to buy a $500,000 home, but they only make $60,000 a year.
Yeah.
Okay. So important. Ideal monthly payment. Maybe they don't know the value, but they would feel comfortable if their mortgage is less than $3,000 a month.
Right, 100%. And
Okay.
oftentimes too, if they're renting right now, they usually only buffer it like by $1,000. So you got to keep that in mind as well. So if they're renting at 2,800, the most average thing I've seen, oh, I can't pass 3,800,
Right. Okay. And the timeline when they're thinking of buying.
Very important.
When you give a pre-qualification, how long does that is that pre-qualification good for?
So it's 120 days. So it'll be refreshed in that timeline, and we will keep going as long as the credit is available, because credit expires in 120 days.
Right. So preferred area. And please don't put on your showing agreement or exclusive buyer brokerage agreement, Miami-Dade County or Broward.
Oof, yeah, that's how you shoot yourself in the foot.
Yes, you need to be a little bit more specific. Maybe they want to be in a certain zip code. Maybe they want to be east of the Palmetto Expressway. Maybe they want to be between this street and this street going south, this and this, east and west. Just try to pinpoint where their ideal property is, because when you go to the MLS, you can map it out and only find properties within that vicinity. Sometimes it's challenging. Like right now, we're working with a client. He's a commercial client, but he only can be in Hialeah or Hialeah Garden. And it's like finding a needle in a haystack specifically for what they're looking for. But we're trying. We're definitely trying. Current annual income. It's a good idea to ask them their credit score to see if they know.
Estimated credit score at least.
Yeah, but when you get those credit scores from the credit cards,
Yeah.
and Karma and all that, those are Vantage scores. You want to explain what that is?
So those scores that they get on those applications are quite inaccurate. And unfortunately, they are inaccurate because they're not getting it directly from the bureaus. They give you a good estimate, more or less, but oftentimes, we'll have the Credit Karma, it'll say buyers at 700. And then when we do a soft pull, they're at 680, right? So like it's not the biggest difference, but it does make an impact in some cases. Like, for example, I had a client the other day that said that they're at 580. That's close. That's the minimum for FHA, by the way. And they're trying to do an FHA loan. So I was like, okay, if you're at 580, you should be okay. Let's do a soft pull and let's see where you're actually at. The credit report comes back and they were at 499.
Oh, wow.
Yeah, that was a big jump, but that was because they had a recent like late payment on a couple of different cards, and it affected their score because the app didn't update in real time.
Speaking of scores and stuff like that, I know I'm going off here a bit. Someone told me that, let's say credit cards or something like that, instead of making a monthly payment, maybe make a payment twice a month
Yeah.
will help your credit score go up a little bit. Have you heard of that?
Yeah,
Or
I have heard of that. There's different algorithms to make sure your credit is going in the right direction. And it's important to gauge what cards you have and what the when it refreshes your balances and stuff like that. So that way you plan it out on when you're paying off those cards.
okay,
Because some cards report on the 25th, some report in 45 days. Like there's all different types of reporting dates.
yeah, you want to position yourself to have the best credit score possible.
Absolutely.
The next critical question, are you a W-2 or self-employed?
Yeah, this is huge right here because I'll tell you why. A W-2 worker, all of their stuff, all I need is the W-2s, realistically. I always ask for all the documents. I see if they have a Schedule C or so on and so forth. But a W-2 is the nicest way because they can deduct everything. They can, put zero at the bottom of their 1040, their personal tax return. But all I need is the W-2. And that is unfortunately not the case for a self-employed borrower.
Yes, which includes us
Yeah,
as
that's us. That's
realtors.
us.
It's funny. I've been a self-employed individual for 25 years now. So it's like a stigma
Yeah,
that even though I've got tax returns for all these 2 years, they scrutinize self-employed people
big time.
big time. Now, if one is self-employed and the other one is W-2, that helps, doesn't it?
It does. It does. Yeah, it definitely supplements income.
Now, does it matter how long you've been on the job as a W-2?
As a W-2, no. So it really works. It really matters about the work history. And then we got to see if you're declining or inclining income, right?
Okay.
So if you're at the current job for a month, that's perfectly fine. We do loans for people that are getting a new job with a job offer. We don't even need pay stubs in that case. So there's definitely certain ways that we can structure it. It's not really about how long you're at a certain job, but it's more about your work history, right? The
Okay.
only reason that question is there is because the self-employed individuals have to have the 2 years of 1099. Have to. Because if not, they're not going to be able to get the loan.
Right. Now, how about if somebody's self-employed, but then they have other businesses? Can that come into the equation as part of their income?
Yeah, absolutely. So
Okay.
as long as they're filing taxes on those businesses, they're able to do it. They're able to
Right.
bring it in. Like,
So, like not a Schedule C,
Mhm.
but an actual S corp that
Yeah,
files their own
100%.
individual and they can prove that they're the 100% owner or 50-50
Yeah.
owner of that company per se.
100%. And I have a case right now where it's a truck driver, right? His main job is truck driver, but he has a vending machine business that makes him okay money.
Yeah.
So his truck driver Schedule C, which is on his personal tax returns, is netted at zero. So I'm like, hey, but you have so on one of the pages, there's a page there where it says the business, right? And it's like vending LLC. I'm
Mhm.
like, what is that? And he's like, oh, it's my vending business. I was like, let me see those tax returns. And then he ended up reporting all of that income. Like he paid taxes. It was like 100K worth of money. So he's able to buy now.
Wow. Okay. Okay. That's an interesting way to look at it. And if you want a second opinion or not approve, what are your expectations?
Yeah.
You want to elaborate on that a little bit more?
Yeah, absolutely. So a lot of banks out there will be have problems. Like everybody has a problem with something and or just wants something done a certain way. If you get this answer, obviously we can help make you look better because we hit their needs right away. Like let's say it's communication, let's say it's options, timeline. Certain different things are expected of the client, and we want to make sure that you look good and the client is taken care of in order for you to get that commission at the end of the day.
Definitely. And last but not least, on this note, remember, if they're planning to sell their home or need to sell their home, that's 2 transactions right there. So don't shy away from that. Offer them to do a comparative market analysis on their current home, just to gauge what their interest is. And even if they don't list, it's a service you're providing and it adds more value to you as an agent.
Yep, absolutely.
Okay, perfect. Okay, so where are we gonna go now to your?
Now we're going to the cheat sheet. Yeah.
Awesome. And then you gotta give us a rundown of what's happening with the Hometown Heroes program.
Yeah, absolutely.
Okay, let's pull up the cheat sheet here. I love this. We're gonna send it to everybody that's connected with us today.
Absolutely.
Okay, so what do you have here?
All right, so I started off with the traditional loans. These are the loans that most people always hear about on the news, such as VA. These are for our veterans, right? Then it tells you exactly where the credit score is, the 580 minimum. It says primary only, 0% down for VA, which is very important. A lot of VA members don't understand that. You do need 2 years of taxes, and there is down payment assistance allowed for this type of program, right?
Okay, no, but it says 0% down payment, but in order for a contract to be valid, there has to be a consideration. So let's say they, to make the offer, they put 5,000, but that's credited to their closing cost,
Yeah.
not to the down payment, correct?
Correct.
Okay, cool.
And the next one we have is FHA. Both of them are at 580 minimum score. Those are the lowest scores you'll be able to accept other than a hard money loan or a foreign national, right? So we have FHA at 580, primary only as well. 3.5% down instead of the 0. 2 years of taxes are needed, and there's plenty of down payment options for them as well.
And when you talk about down payment options, okay, assistance, can they connect with two different programs in one closing?
It's hard to stack them, but oftentimes maybe a grant and a down payment assistance program can fit the file, but it's very rare that we see that. Like it has to be, for example, I did a bus driver. The bus, like the city gave him a grant for being a
Okay.
first-time home buyer working for like a public service.
Right.
So we were able to use the grant of 3K, and then I still got him another like 10 grand. So then I think he paid like 2 grand for his house.
Right. And where did that 10 grand come from? What?
It was a down payment assistance program called the Florida Bond Program.
Okay, so keep in mind, First Origin Mortgage Lenders has different types of programs,
Yeah.
sometimes local, county, state,
Mhm.
so on and so
And
forth.
we're always looking for new ones. Right now is over 10. In August, we're looking to add on a few more, hopefully. So fingers crossed on that, and then we'll have over like a lot over 10. So
Definitely, definitely. And what if somebody has the money for down payment? Can they still aspire
yeah,
to
of
down
course.
payment assistance to, and then
100%.
use it for their closing costs or something like that?
100%. Yeah, we've done it before that we've used the down payment assistance. It covers the down payment or the closing costs, whatever it may be, to
Okay.
help them out.
Cool. Okay, let's go to conventional HELOC.
Yeah, conventional. So 620 minimum score. We do primary and investments on these. 3 to 20% down. Why is that the range? Okay, 3% down is for our first-time home buyers buying a primary home. They can do 3% down. Noted, it is less than FHA because the
Yeah.
general public always thinks that FHA is the lowest down, so it's the best in the world. But that's quite the contrary sometimes because conventional, you can actually, with a good credit score, get a lower mortgage insurance than FHA, which makes your your monthly payment cheaper, and you put less down. So it makes your life a lot easier and cheaper. I had a situation that on an FHA, even though the interest rate was lower, the mortgage insurance that came out on conventional on their 3% down was so low that it made sense to go conventional first time home buyer. So
Very well. Okay, you want to explain a HELOC for people that don't know what a HELOC is?
yeah, so a HELOC stands for home equity line of credit. Okay, so it's basically a second mortgage where you're able to take out equity from the home. Okay, and this type of mortgage, you pay interest only or principal and interest payments depending on what program you want, and you're able to essentially use it like a big credit card. So you let's say you take out 100,000, right? As soon as you take it out, you start making these interest only payments over X period of time. If you decide, like, let's say you use 100,000 towards an investment and you make the money back and then some, you could pay it off and use it again for the same investment. So we use that a lot of times for our investors because they tend to do these fix and flip loans or they're buying inventory for their businesses. And that stuff always comes back and they're able to use it up and pay it down, use it up, pay it down. And they love that. Investors love that type of stuff.
Great. Okay, so flexible loan options.
Yes.
P&L, DSCR, all these lingos you got going
Yeah.
on here.
Yeah, so P&L is one of the most flexible options out there right now. So we get a profit and loss statement, and whatever the net income is, we're going to be using that on the profit and loss statement. So Maybe their bank statements don't reflect their income. Maybe the taxes don't reflect the income. P&L is probably going to be the best bet because all you need is your accountant or tax preparer to prepare a profit and loss. And that's it. We use the net income and they're good to go. Right. And that can be used on primary and investment loans. And on a primary, you can go as low as 15% down. On an investment, you're probably going to have to go to 20% down. That's why I have it there. And there's no down payment assistance on that. If
Right.
you notice, though, on bank statement loans, there is down payment assistance now,
Yeah.
and that's a new one that we're rolling out. But we'll get to that after I talk about DSCR, which is one of my favorite programs because it's such an investor friendly loan. We base the loan on rental income. As you can see here in the income section, it says rental Inc stands for income.
Right.
Um, Essentially, if your mortgage is costing you $1 and the rent you're making is $1, you're good to go, right? And that's how we qualify you for that loan. And it's an amazing product and it helps people build these Airbnb empires without paying so much in taxes and so much for the property at the same time. Because oftentimes what happens, you're paying the 20% down for a conventional investment loan, and then they need to pay 200,000 in taxes on top of that. So they're dropping 400,000 just essentially on one property when they could
Mm-hmm.
just do the 100,000 just for the property and not have to pay the taxes. Right. So that's really a big one right there.
Right. Now, the DSCR loan, does it matter if it's a single family versus a duplex or something along those lines?
No, not at
No?
all. No, we
Okay.
we do multifamilies. We do up to I think it's 12 units. So you
Okay.
can do DSCRs up to 12
Up to
units.
12 units. Okay. Yeah, I had, an experience recently that it was a single family with an additional dwelling, but the primary zoning was single family and the people could not qualify for the DSCR loan at the end of the day because of the fact of the primary zoning.
Yeah.
In other words, if something would have happened to any of those two structures, based on the zoning, they could only build one house and not the two that were on the property generating income.
100%. Yeah.
Okay, but we'll leave that for another day.
Yeah.
Okay, bank statement loans.
Bank statement loans are amazing as well. So we get 12 months of bank statements. We do the average of those, the average of the deposits in those 12 months, and we use that as income, right? On this program, this is the only non-QM loan right now that has down payment assistance on it. We'll go into down payment assistance another day because that is quite extensive information, and I think we're running out of time here.
Okay, very well. Okay, foreign nationals.
So foreign nationals, there's no score at all needed. Okay. It is for investment loans only, and it's 25 to 30% down. Okay. This is based on the rental income. There are programs that we can, calculate their income from the different country and stuff like that with CPA letters. But I think the DSCR route is a lot easier and it's actually less down payment than it would be on the income driven one. So that's definitely a good one, and it's no down payment assistance, but it's some of the best products out there because I think the biggest investor right now from overseas is Colombia. So if you
Okay,
guys are sending marketing out there, I advise to do so completely because a lot of people want to take their assets overseas and move them here to the US.
okay, but how about, I know we're talking about foreign nationals, but how about someone that lives in New Jersey
Mhm.
or in Arizona and they want to invest here, a property? You and
Yeah.
I were talking about that the other day. How can First Origin mortgage lenders assist those individuals that don't necessarily live in Florida?
Yeah, so we actually do DSCR loans all over the country. And so all the investment products we do all over the country. For primary homes, we're only licensed in Florida, Georgia, and Louisiana. So if you have somebody looking to buy an investment property somewhere else, then we'll be able to help them out.
Okay, that's good to know. So we're not limited, as long as it's an investment property, to
Right.
just folks that are living in Florida. It could be anywhere else. Perfect, perfect.
Absolutely.
Fix and flip.
Fix and flip is the buzzword of the year, in my opinion, because you talk about fix and flips and what options you have for that, you're likely to get a few phone calls, right? So this product allows you to put between 10 and 25% down. It really depends on the property, your credit score, and what type of like, are you a citizen, permanent resident, or on a visa? So, and we do foreign national fix and flips as well, and that's why I put it's up to 25%. Um, I've had a foreign national do 20% because the property was in perfect shape to do a fix and flip. but that's with an
Mhm.
exception. So the 25% for a fix and flip foreign national is allowed. And there's no income verification. All you really need is a credit score. Obviously, if you're foreign national, there's no credit score. And there's no down payment assistance allowed, but you get the refinance, I mean, the rehab cost
Built
financed
in,
for you. Yeah.
financed
And it's done like a holdback. So you pay for something, you do an inspection, and you get the money for it right away. So it's important to have some type of reserves.
to do that type of
Right.
loan.
They want you to have skin in the game.
Of
So
course, of course. But typically on a case like that, it, you, I would think it would be more 25% down payment because for a fix and flip,
mhm.
the value after repair needs to be what?
It needs to be 75% ARV.
Okay, very well. And of course you have hard money.
Hard money is probably one of the best ones out there. Even though it sounds scary, there's no minimum credit score. We do like to look at their credit profile just to make sure everything's clean. There's no judgments, no liens, no nothing like that. It is technically for investment only. And then there's the down payment goes from 25 to 30% down. Not a lot of hard money investors go up to 25% down. So that's very important. No
Right.
income needed and no down payment assistance on this one.
Okay, but a hard money is gonna have a higher interest rate.
100%, yeah.
Okay,
So,
and when or does it balloon at some point?
so I think the average is 36 months.
Mhm.
So after 36 months, you can either refinance into another hard money or to something else. And there's also on some of these loans, there's also prepayment penalties on the investment loans. So you have to keep that in mind too, that most investment loans out there do have prepayment penalties other than like the fix and flip. And there's always
Mhm.
options that you could like do 0%, 0 years and prepayment penalty. But it does affect your interest rate at the end of the day too, because you got to think these guys are lending. It's all risk based, right? And they're lending these risky loans to you guys, so they want to be able to make money for X amount of time.
Okay, very well. Yeah, but sometimes it's a means to a way.
Oh
If
yeah,
you think of
absolutely.
it. Now, the payments that are made, is it towards principal or they could do interest only?
Yeah,
Those hard money.
hard money is interest only.
Okay.
Interest only, and it's almost like a HELOC in some cases because we do second mortgage hard money too. It doesn't go all the way up to 90% CLTV, but it does go up to 75, which helps a lot of people.
Right. So last but not least, the second mortgage on a property.
Correct.
Okay, up to 90%.
Yeah.
Uh,
These are for our individuals that don't quite qualify for the HELOCs, but still want a second mortgage. So they don't touch their beautiful interest rate on the first. And here you can do bank statement, you can do DSCR seconds, you can do um, P&L seconds, you could do standard doc seconds. Like there's a plethora of options that I would sit here and talk to you for another 20 minutes just listing all
right.
the different docs.
What is CO refi?
So CEO refi, whenever you see that type of term, it means cash out refinance.
Okay, that client that you helped a couple of months ago, that's what he did.
Yes, correct.
Okay, very well. But is that a smart move if they're gonna do the cash out to invest in another property? Or should they have gone with a HELOC?
It really just depends on their scenario. If they're doing a second mortgage, it's usually principal and interest. There is interest only options. So let's say if they're able to obtain a second mortgage at 8.75%, right? Because they're usually higher interest rates, 8.75% versus the HELOC that is at 10 or 12, depending on the program they use, and the 9% might be coming out to a lower monthly payment than the HELOC. So if that's the case, then yes, 100% you do the second mortgage. If not, it's the HELOC, right? So it just depends on their credit scenario too.
Very well. Of course, there's a general document list, which is pretty standard, but I have to tell you, in today's tech savvy world, all they have to do is scan your QR code and you have the application process
Yeah,
through an
absolutely.
app.
Yeah,
And they can upload the documents and everything through there.
100%. It makes life a lot easier for you guys because you're not collecting these stuff via email or by paper. They're able to drag and drop the documents into their client needs section, and that's it.
Mhm.
It's as easy as that.
Very well. Anything else you'd like to add before we wrap up today? Oh, you were going to talk a little bit about Hometown Heroes.
Yeah,
Where are we with that? That seems to be like the most
it
popular.
is. That is the another buzzword of the last couple months. So Hometown Heroes, they've been delayed a couple of times. So at first it was supposed to come out July 1st. I sent out an email. They were saying now that it was supposed to come out in the middle of the month. And as of a couple of days ago, now they're saying that it's going to be August 1st. So I was hoping that the guidelines at least would come out today, because they are talking about there's a professions list that is limited now. It's not like last year where you could breathe, work for a Florida employer for 35 hours a week and you get that money. So unfortunately, it's not like that anymore, but there's still plenty of down payment assistance options out there. So, but we're going to be attentive, waiting for that stuff. You want to show them the scenario, the
Which one?
pricing scenario I did for your open house?
Oh, sure, by all means. Okay, let me see where I
I
have
I
that.
forwarded it to you again, so
Oh, you did, but this morning
yeah,
or?
this morning.
Okay, so let's look at Austin. Cheat sheet.
There you go.
There it is. He does this for all our properties that we're gonna do open houses, so great investment property here. We were talking about that. There was a main home and there was an additional dwelling. This is a home from the 1950s. So according to the city of Hialeah, this is what they call legal non-conforming. So because the primary zoning is single family, but the property and land use is classified as multifamily 2 to 9 units. So it's a great deal. So you want to talk about the different options you provided here, personalized it. I gotta get a picture with the short hair now.
So essentially,
Oh, wait a minute. Hold on, I want to make sure the screen is shared because I turned it off a moment ago. Yeah, you guys are not seeing it, so let me show it to you really quickly. I apologize for that. Okay, so. Okay, there it is.
All right, perfect.
Okay, so that's the house that caused all this headache.
Yeah. So essentially, whenever you guys have an open house, you guys send me the listing, what you guys want the purchase price to be, and I'll put this together for you. All I did was I got your description that you guys wrote. I shortened it a little bit just to fit this area because it is a smaller area. A few pictures, 3 pictures, some highlights, 2 homes, big corner lot, separate meters. I think that's a huge one. And then I'll also have some scenarios here. So I think this is more of an investor-friendly property. So that's why I geared it more towards the DSCR, the P&L conventional. But if you have a home that is a lower purchase price that looks like more of like a family friendly home. They don't have like the FHA, I have the conventional, I have VA, whatever it may be.
Right, and you even indicated what the typical
Yeah,
credit score should be on these types of loans,
absolutely.
obviously. Okay, very well. So believe it or not, this flyer brought in several people.
Really? Okay.
Yeah, because I posted it on all social media and I had like 4 walk-ins direct. And of course I had copies to provide to them right there and then. And if they wanted to, they reached out. Well, one of them reached out to you.
Yes, one of them did. So
You
that was
know.
awesome.
So even if he doesn't end up buying that property, guess what I'm gonna be following up with to see if I could find them another property and still use that. You finished the pre-qualification?
They're done, yeah.
They're done.
I sent them a pre-approval letter already.
Awesome. Okay, after the session, you have to tell me how much they can afford.
Okay.
Okay, great. Okay, if there's no questions per se from the participants, I think we're pretty much done
Yeah,
for today.
we're done for the day. And if you need anything, of course, we're always here for you. It's at the office or via phone. You know, we're big on picking up the phone. So
No, definitely, definitely. Okay, well, until next week, we've recorded this and we are going to definitely be posting it. Oh, Vitaly is saying thank you. We're going to be posting it on our YouTube channel. So you want to check out our channel, Canvas Real Estate Miami Lakes, and subscribe. There's all sorts of classes there for the last couple of years that we've done. So you're always able to go back and refresh, okay? Take care and we'll see you next time, okay?